This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's crude oil imports fell 14.6% in May from a high base a year earlier, with daily arrivals hitting the lowest level this year, as maintenance at refineries limited consumption of the resource. But refinery utilization rates are expected to rebound in coming months as refineries resume operations, analysts said. May arrivals were 40.97 million tons. Data released by the General Administration of Customs showed on Monday, equivalent to 9.65 million barrels per day, BPD.
OPEC and its allies expect oil inventories to fall further in the coming months, OPEC's Secretary General said on Monday, suggesting efforts by the producers to support the market are succeeding. Oil stocks in developed world nations fell by 6.9 million barrels in April, Mohamed Barkindo said in a virtual appearance at the Nigeria International Petroleum Summit, 160 million barrels lower than the same time 1 year ago, making the figure public for the first time. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC+, decided in April to return 2.1 million barrels per day, BPD, to the market from May through July.
Moving on to the top news in the energy sector.
A recovery in the price of oil to more than two-year highs is offering a long-awaited opening to companies and private equity firms to shed unloved assets in the U.S. oil patch. Sales of land parcels worth $6.9 billion have been announced in the first 5 months of 2021, almost eclipsing the $7 billion recorded in all of 2020, according to data vendor Enverus. Last year was the worst for U.S. acreage sales since at least 2006, after energy prices plunged due to coronavirus-related demand destruction. More deals are on the way. Land worth more than $12 billion is either up for sale or being prepared to come to market in the United States, according to more than a dozen investment bankers and industry sources interviewed by Reuters.
Hedge funds focused on commodities have generated strong returns in 2021, and investors long wary of such funds are now putting money into them, betting the recovery from the pandemic will charge demand for oil, gas and raw materials from metals to grains to sugar and coffee. While money has flooded into other commodity investments, hedge funds are a more surprising choice after years of outflows and closures of several high-profile firms. Among the funds notching big gains this year are those run by famed oil investor Pierre Anjurand. His commodities fund made 27% in the year to the end of May, while his discretionary enhanced fund made 33%, a person familiar with the matter told Reuters on Wednesday.
Next, we have the top news in metal markets.
China's iron ore imports in May fell 8.9% from a month earlier, official customs data showed on Monday, as shipments from major miners were at lower seasonal levels while recovering overseas markets took more of the steelmaking ingredient. The country took in 89.79 million tons of iron ore last month, data from the General Administration of Customs showed, down from 98.57 million tons in April. May imports, however, were up 3.2% from the same month in 2020. Iron ore arrivals have fallen for 2 straight months as supplies from top producers in Australia and Brazil are typically lower due to seasonal factors such as disruptions due to weather.
China's copper imports fell 8% in May from the previous month, customs data showed on Monday, as record high prices further eroded buying interest in the world's top consumer of the metal. Imports of unwrought copper and copper products were 445,725 tons in May, the General Administration of Customs said. That was down from 484,890 tons in April for a second straight month-on-month drop, but up from 436,030 tons in May 2020. Benchmark London copper prices rose 4.4% last month, hitting an all-time peak of $10,747.50 a ton on May 10. We will now look at the top news in the agricultural sector. U.S. soybean oil futures rallied to a record high on Monday, with tight supplies in focus due to strong demand from the biofuel sector as drivers return to roads following COVID-19 related shutdowns. Chicago Board of Trade soybean oil for July delivery was up 0.37 cents at 71.71 cents per pound at 8:36 a.m. Central Daylight Saving Time, 13:36 GMT. Prices peaked at 73.74 cents, the highest ever, during the overnight trading session. Soyoil futures have jumped 71.3% this year due to dwindling supplies of soybeans that have left end users scrambling to keep up with global demand for food and feed products, let alone greener fuels like renewable diesel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.